TGIF, everybody. How you doing, Brock? Hope everyone had a good week. So another wild week of action. And guys know I talked about it early in the week, thought we may have bottomed in the S&Ps and that this breakout of the wedge was important. Added this green line in here at 2400. Good, buddy. Hi, Sinatra. So this was, again, I said yesterday where the Fed made their first announcement and it just blew. So not coincidentally, this 2400 level came in with the breakout of the wedge. 38.2, in these environments, I don't know about you guys as traders, I didn't have a hard time trying it, but I do have a hard time holding positions in this. I mean, I normally do, but it's even exacerbated a little bit here. So, what I'm doing here is going for minimum expectations instead of maximum. So 38% was, I think, a conservative target because, if it's a wedge, it's got further to go. So, as far as extensions, not as much high conviction as this level at 2400. And, there've been a lot of studies after a crash about having retests, and you never know when the retest is going to begin, but under 2400, it would actually measure new lows. And then sometimes with wedges, you get a retest of it, and the retest is going to come in back at the lows. So that's possible too. Anyway, went to the door on S&P longs. I'm not short here, I'm flat. In this environment, I'm just happy to, be correct on a probability and go to the door and say next. So something I tried yesterday that's working out a little bit is the short in the euro from the 50% level here. Already taken partial profits, big believer in it. We could extend to 61.8 when you look at it, and it is Friday, right? It's a darn good looking weekly candle. I mean, we start taking out 1160, it could be good. What I'm looking at it this way. I like these big range candles. So is this a daily? It's a weekly. 4 hour. Huh. Must be the weekly. Anyway, I was looking at how we could come up with a arithmetic target on this. It must, yeah. Anyway, I forgot it. So the Dixie, I know a lot of people are saying that's it for the bears. So, here we are, held where it had to. I know it was on the euro. Had this real weird candle. I don't know if it was a 1 hour. Anyway, I can't find it. With the yen coming off the way it is, gold didn't make much hay out of it. It's still grinding. Maybe it's a dysfunctional market till they come up with the new futures contracts. It's just dysfunctional, but look at what we tagged up here, 78.6. And maybe this is 1, this is 2, and we get a 3 next week. But back under these lows right here, even if you're long-term bullish gold, you start taking this out right here, you could see 1550, which, if you're a bull, that'd be a great buying opportunity. And I really think that my highest conviction trade on the board is here, US dollar yen coming off. that with everything the Fed has done, I've talked about this, everything the Fed has done, and he had a couple of, about a 300 pip decline in US dollar yen, which would normally be constructive for yields, right? And TLT did not make much hay out of it. And so I'd say my biggest conviction trade is that we're not going to see 180 in the bonds again. We're not going to see 40 in the 10-year. And this is a bad print. We're not going to see the 30-year back under 83. So, what I see developing here is this could have been a 5 down here. And maybe this was 1, or maybe we haven't completed 1, 1, 2, 3. I don't know Elliott Wave. Anyway, I wanted to buy a break, and I'm looking for something like this or a fib extension. And, if you don't trade bond futures, there is an ETF you could trade. The opposite of TLT would be TBT. Here it is. Right here. So TBT, holding this probably 61.8 or 78.6 back, but can make a move up to 23 on an ETF. That'd be a pretty nice trade. So if someone said, Dale, what's your biggest conviction? Is it a big bear market in stocks? Is it a big bull market in metals? A big bull or bear market in the dollar? I would say that it's interest rates for me. And we'll see how, if I'm right about yields, I would think it wouldn't be too positive, the metals, and it should be constructive, the dollar, but that's, may not be the case. But you know what, guys, it only takes one. I saw guys trade their whole career in one trading pit on the floor. They knew cattle like the back of their hand, and they did quite well. So you don't have to really, have conviction on 10 different instruments. They want a flat curve. Okay, well, then you're going to want to go to the 10-year, the front end. And actually, the front end does look better. It is starting to flatten again. Good observation, Brock, but you want to go the 10-year note then. Keep it shorter term. And, just, and this will be it. I'm going to turn it over to Blake, but just a 10-year note. This was about a 90 basis point rally. And, in here, as long as we hold 60, you could have 90 from here. If you had 1.618, it'd be 140. It's going to take you back to a 2% yield. So, those are my thoughts going into the weekend. And this is something that I recommend people do on Fridays because it gives you a whole weekend, especially since you're, a lot of the country is on, personal lockdown. The troops aren't out yet enforcing it, but gives you the whole weekend to learn to navigate and get used to it, plus do your work. Your best trades for next week, they're drawn up on the kitchen table. They're drawn up on the kitchen table over the weekend. So, the markets aren't running. You're not under pressure or duress. And you can see the forest from the trees. And, speaking about forest from the trees, why not take a walk in the park with Forest Park FX and find a broker that's going to give you a nice rebate or help you pay for your, not prescription, subscription here.
Or stay with your broker and still make.
Yeah, stay with your broker. Yeah, you could do that.
I stayed with my broker actually because it was a good option. So, I just enrolled to the program and I still make money.
Wait. You get ForexAnalytix for free?
Yeah.
Just kidding. Well, so guys, that what Steve is saying is he obviously being one of the co-founders of ForexAnalytix and on the team, he
I
gets
guess the
ForexAnalytix for free.
cashback. Yeah.
So he got to get a cashback option with the brokerage firm he's currently using. So everybody should be doing that. I mean, God, if I could get rebates from JP Morgan, dude, I'd make a killing.
Nice. It would be enough just for you to get break even, right, at the end of the day. You would make money from rebates.
I spend thousands and thousands each month in commissions with JP Morgan. I mean,
they love you.
Oh yeah. I'm peanuts. You should see the rest of the office. These guys trade huge. The guys that I trade with, they're but anyway.
We also have an announcement, right, Blake, that your daily roundup is for members only now?
Yeah, it is. Yesterday was my last daily roundup for
general public.
It's not like they can't watch the video. It's just they won't. It'll be like an hour or two after the fact.
Like Face.
Yeah. Well, no, Face is.
Face, that's right.
Anybody can watch Face. No, like European crossover.
Oh yeah. Okay.
All right. Yeah. So it's going to be for clients only, but we'll still post on YouTube so you guys can see it. An hour or two later, or before Asian trade or whatever. So yeah.
All right. So what do you think? Pretty strong week the euro put in. I'm selling retracements, but I look at that weekly candle and it gives me a little pause about bearish euro.
Oh, I got, just so you guys know, I actually got run over by the euro yesterday. I was short. I was trying to play this. I'll just do it roughly. Yeah. I was trying to play this I'm just kind of off the cuff driving it or drawing it. Yeah. But I was shorting over here at 109. I want to say I was short at 109 like 20, and I had or maybe even like 10, roughly my average was around 109, and I had my stop like at 109.65 somewhere, right? Or no, I had my stop like right through 109 90s, like somewhere through here.
What are you thinking now though, bro?
I'm sorry?
What are you thinking now, though?
No. Wait. You know what? I'm trying to recount what I did yesterday because obviously I did a bunch of stuff. I had my stops actually at above 110, and so I did get stopped out yesterday. And as I was trying to short what I thought would be a pennant, but now that we're where we're at, I'm not sure what to do with FX as far as the euro goes because. I am bearish equities. So let me start off by saying that because if I'm gonna show you a couple of charts. First of all, you guys don't even have to be ForexAnalytix subscribers to kind of know what I was thinking because my chart of the day yesterday was the S&P. The chart of the day on our ForexAnalytix blog was the S&P. We hit the 38% retracement downtrend line. I figured, well, this is my best manageable risk opportunity to be short the S&P is yesterday afternoon after Asia opened or the S&P opened again. I just laid into some S&P shorts. The reason why is because it was 38% retracement downtrend line. And even though it's Friday, I'm, getting a few hours of sleep every night. By Friday, I start to yawn. So just bear with me. Anyway, I know we're back above 2,500, at least for right now, but I knew that if we got above like 2,700, I'm wrong. And being short at 26, above 2,600 was where I wanted to be short. I am short now. And I, told everybody I shorted yesterday afternoon in the chat rooms. and even if you weren't in the chat rooms, you can see the pattern in play was put in yesterday too. Now, I want to show you a chart that I saw after the fact, and I thought this is really interesting, but also very compelling for what I'm doing. One of the guys from my office, he retweeted this tweet from this Nautilus Research, and I don't even know who they are, but this is the S&P from a couple of days ago. This is the S&P from 1929. This is the S&P from 1987. And what you'll see is, you know, all 30% declines, bounces of about 20, 15%, 18%. And yesterday we bounced 22%, basically 21% off the lows. And then, you know, my thoughts were, well, we're going to go back and retest these levels. Now, if you do use ForexAnalytix, I actually confirmed what I was doing with Gregor Horvat's work, and he's like, okay, we're going into wave, you know, or we're going into the B wave, which will take us back down towards 2300. And I'm like, well, that's roughly in line with what I was thinking. I was thinking, you know, we might retest these lows or maybe even hit new lows, but regardless, I knew he was thinking, you know, we've got wave B coming. And then I was looking at all this and I'm like, well, that also makes me feel good that we could possibly hit new lows from here, maybe close to 2000 or maybe even just 2300. So that's why I'm short. So with that being said, the question is, what do you do with currencies? And I don't know what to do with the euro. I mean, the euro just hit the 200-day moving average, which again, if you use ForexAnalytix and you read like last night's analysis that I wrote, okay, the end of day analysis, the euro dollar squeezed past the resistance zone and 38% retracement, invalidating the pip, which is the pattern in play, and making a move to the 50% retracement. The 200 DMA may also offer some key resistance in this rally. So last night we hit the 200-day moving average right at 110.82, and then we've fallen, you know, 80 pips since then. I did not short the euro dollar overnight. So the question that you asked me, Dale, what do I do now with the euro? I don't know from here because I don't want to short it after an 80 pip drop, but then again, I don't want to be a buyer either. So I'm just kind of watching the euro. But also, let's say the stock market goes down from here. I have a little bit of aversion to shorting the euro too aggressively, knowing that currencies like the euro Aussie may be very well supported. You know, I'm looking at the euro Aussie thinking, okay, while we're above this 180, I don't really want to be on the short side of that. I don't want to be on the short. I'd rather be on the long side of the euro Aussie because these tend to move higher in periods of risk aversion. So the question is, well, what do I do with currencies? And that's when I start looking at, you know, things like something that I'm short right now is the Kiwi. All right. Now you might be saying, oh, well, why the Kiwi? Well, the Kiwi has what I think intraday an inverted, or excuse me, not an inverted, a head and shoulder pattern that's developing. So as long as we stay below 60 cents, as long as we stay below 60 cents, I'm going to stay on the short side of the Kiwi dollar. Now, I'm not getting aggressive yet until a break, excuse me, until a break back below 59.15. A break below 59.15, or, you know, basically 59 cents, I am looking to, you know, be a little bit more aggressive with the Kiwi on the short side, but I am building a short position as of this morning. I've been selling it up in the 50s and 60s. So that's what I'm doing. And you know, if you know, you could look at the Kiwi and go, okay, well, yeah, it makes sense. Would you trade the Aussie in the same fashion? I would. The Aussie's developing a very similar, you know, head and shoulder pattern. it's developing a very similar head and shoulder pattern as well. It's a complex head and shoulder pattern, so it's, you know, when you have a higher right shoulder, a slanted neckline. So I believe that the Aussie dollar is also a short, but I don't want to get too terribly aggressive while, you know, we're above, you know, this 60-50 level. But I think the Aussie's a good setup for a short as well. So with that being said, I'm focused on these commodity currencies more as shorts right now, and you guys might be thinking something along these lines. Well, Blake, I hear there's a lot of pension fund rebalancing for the end of month, you know, flows, which may be true. However, we've been talking about the end of month flows, the pension rebalancing for the last, since probably like Tuesday. The Twitter sphere really started talking about it since yesterday. My thoughts are, regarding the S&P and regarding the stock market, a lot of those end of month rebalancing flows have already been done. And by the time that the majority of the market starts hearing about it, hence yesterday, I think a lot of it has been done. Now that doesn't make me right or wrong, and I could be completely wrong here. Maybe we do go into you know, next week, next Monday and Tuesday, aggressively, you know, buying stocks. The market does, but I think a lot of those moves, a lot of that flow has been already taken care of this week, and that's what propelled us 20% off of the lows. So I think it's going to be a little bit trickier and a little bit harder at this point, and that's why I'm just kind of focusing on a couple of these commodity currencies and just keeping them on my radar as far as you know, looking for opportunities. Now, you know, I want it, and just so you guys know, I had a couple buy orders for like the dollar Canadian. Last night I had a buy order for 139.50. You can see all these little, I was hoping we would get one more drive down here last night to be long. That didn't happen. I had an order for the US dollar Mexican peso. I wanted to be long down here. You can see right here, this just in the new lows. I was hoping that we would get in the new lows and then I could get long. That didn't get triggered. The one last currency that I had an order out last night is to buy the US dollar Norwegian krona right at the 618 at 10:30. I had an order to get long here. That didn't happen. So I had some orders to get long or get short some of these commodity currencies after these big moves. They didn't get tripped last night. So, you know, now I'm just, you know, shorting the Kiwi dollar shorting a little bit of Kiwi dollar up here. And like I said, I'm not getting aggressive till we're back below 59.15, 59.10. Then I'm going to start, you know, aggressively, you know, being on the short side intraday. But for right now, it's Friday. One of the things that I mentioned yesterday, like the euro, I actually turned my profitable day yesterday into a negative day. I've actually had a really good month, and I'm not so keen on because this is the end of my quarter. I'm not so keen on ruining my entire quarter with a couple of bad days. So I am trading rather lightly for the next couple of days, so I can you know, get paid this quarter, because you know, in this environment, it's important that, you know, to try to maintain capital best you can. So I'm not being very aggressive right now. I'm actually trading fairly light, and plus the volatility is so high that you gotta you know, be extra careful. But I am trading a little gingerly the next couple of days, just knowing that it's the end of the quarter, end of month. I think a lot of the flows have been done, but I'm not 100% sure. So therefore, I think it's wise for you guys to be really, really careful the next couple of days. It's not going to, I don't think it's going to be easy by any stretch of the means, but I do have more of a bearish bias of the S&P and risk while we're below this trend line here and below the 38% retracement. And remember, guys, just so you all know from a trend standpoint, when you're in a trend, which I believe we're still in a very strong bearish trend, like in equities, when you only retrace 38% of a move in a strong trend, that reinforces the trend. So in this case, when we have a what I believe to be, we're in a bear market right now. I believe, and let me grab I'm going to grab a draw here. Okay. So I believe we're in a bearish trend. While we're below this 38% retracement, I believe this bearish trend to still be strong. Now, do I think we're going to drop at the same rate that we just did? No. I would be probably thinking we do something like this if we hit new lows. It's not going to be as strong. It's going to be choppy, and it's not going to be, it's not going to be pretty. All right. It's just going to be, we're still in this bearish trend, and it'll probably do something like this. You know what I mean? I just don't, I don't want to be bullish while we're below here. You guys have heard me say a lot, I'm expecting an L-shaped recovery, not a V-shaped recovery. I'm not expecting the market to do this. If you're out there listening to CNBC and they've got you convinced that we're past the worst of this, you're wrong.
Doesn't really matter, Blake. If they were out there listening to CNBC, they don't have any more money left.
No. I mean, that's not true. There's a lot of very sharp people out there, but don't let the financial media let you believe that we're past the worst of this. Look at what's happening in New York. Look what's happening in Michigan. Look what's happening in Louisiana right now, and in California. It is still a very dire situation. And when you take the biggest, when you take California, when you take Michigan, when you take New York, you take Florida, is going to be a disaster. You've got all these people that fled New York over the last week going to Florida. Florida is going to be a hotbed. Then you got Texas. This is probably going to be it's going to spark up in the next couple of weeks. These are the biggest economies in the United States. Will we be able to open parts of our economy, like the green belt and some farmlands? Yeah, of course. But I believe that we're still in for several weeks before we really wrangle the situation under control. So be careful about being too bullish at this point in time, I guess, is what I'm trying to say. All right. Okay. And I want to say, thank God it's Friday, and I'm so happy for this. It's weird. You lose track of what day it is. And, I know for us in the markets, it's a little easier than the average person, but man, I'm ready. I'm ready to have a cocktail tonight. I don't know about you guys. So
you should try doing that with a toddler running around chasing the cats.
Oh yeah. Anyway, guys, I want to say, if you haven't joined ForexAnalytix, please do so. This is we have our special that I know it says it expires the 29th at the end of this week, or end of this weekend. So take advantage of it. It's it's a way that you can be involved in our community, not just listening here, but be chatting with us all day long. I'm in the chat room for 12 hours a day. So and that's even though there's so many other people in there, not just me, obviously, but it's if you want a community where you can not talk about, other crap, just, more about the markets. And of course we chit chat a little bit in there like you would expect, but, it's a safe place for traders. That's me and the other guys, we designed it to be, is just a safe place for other traders to be at, to be able to talk about the markets, what's, our interest. So anyway, I hope you guys get involved, and I want to thank you for listening in every day. And I'm going to pass it over to my colleagues, Steve Stelios and Coach. So,
thank you, Blake.
Thank you, Blake.
Thanks, guys. Hey, happy Friday to y'all, and have a good weekend. And be safe. Wash your hands. Keep your distance. Be good to each other.
Yeah. No prostitutes, guys.
See you guys. Had to leave it on that note. All right. Bye.
Oh my God.
I think we'll call it a day. All right. See you on Monday.
That's it. Yeah.
Hey guys, on a more serious note, I was listening to a comment.
Political correctness meter just broke, so nothing else to say here.
Right. That all the central governments going big to stem this world shutdown. That Germany went the biggest. I think 30% of GDP is their package, and the point was that the U.S. at $2 trillion, it was only 10% of GDP, and that most likely they're going to have to come in with another package after this. It wasn't enough. What's the point compared to the rest of the world? The U.S. did not go the biggest. Germany did, which is pretty unusual because Germany is really conservative about that.
Yes, Coach. I want to remind you that before we had COVID, I showed this on this show. You remember it?
Mm-hmm.
These are Germany's deficit. If you notice, instead of a positive sign, the vast majority of the years we have a negative sign. That is surpluses. So Germany, since 1991, that the data shows here, until last year, has on average run mostly surpluses. So even Keynes himself believed that an economy should be running deficits when times are hard and surpluses so they can fund those deficits when it is on expansion. So yeah, Germany can afford to have a bigger package because they've actually saved that money.
Yeah.
Unfortunately, that is so far away from being true for the US. US was already running a real deficit if you count the off-budget items, which is a joke, having 40% of your balance sheet being off-budget items, but whatever, of like 7-8%, and it's currently going to be at 15+%. Germany was running a balanced budget after mostly running surpluses, so yeah, they can afford to do that. That's the big difference. Germany does not need a central bank to fully monetize all of the debt they issue to do that. Speaking of which, we've had that conversation as well. Fed's balance sheet is now above 5.3 trillion. And this is just the beginning. If you remember, we had this conversation when quantitative tightening was finishing up and we were at 3.7. And, we said that we should be at all-time highs, rather soon. Yeah, I could never imagine the pace with which we will be jumping to all-time highs, because we went from 3.7 trillion to 5.3 trillion within a period of, 3 months. Yeah. And with the pace we are accumulating assets, I think 10 trillion is easily doable within the next year or so. So, that's a huge issue with huge macro implication, which we're not going to talk about today, because after Stelios briefly tells us what we have Gregor with us, and this time he he should be okay with his computer, so we can get his input as well. So, Stel, what else did we have overnight?
Well, obviously the main event is still the virus and the way it's going. The US is increasing in cases. Spain going unabated, unfortunately. Italy is also not showing it. They had a couple of days which were lower, but now they're grinding higher again. It's like it's still fully, unfortunately, going on and spreading. And I think these lockdown measures eventually are going to have some effect. But we've said this every single day here. The effect on the economy is going to be big. We had, interestingly, I don't know if you saw it. You're going to laugh. We had some Italian numbers today for March. Okay, March is this month. Okay, so everything going, it's not January or February before everything went really, tits up, as they say. So we had Italian business confidence and consumer confidence. Business confidence came in quite a bit lower than expected. Consumer confidence came in higher than expected. Above 100, which is the average point. So it shows you businesses already are feeling the heat, right? Because they have to stop operating. Many of them are going to close. It's going to be very tough times. But the average consumer, sitting at home or doing whatever, it's going to be okay in a couple of months.
Yeah, we've said it multiple times, Stelio, and that has always been the case. Consumer confidence was always a very lagging indicator.
Yep.
So it's always late in turning higher after a recession or at the end of a recession, and it's always late in turning lower, when one is beginning.
Yeah. So that was on that side. Okay, we obviously have the $2 trillion stimulus package, which is due to be passed on the House of Representatives today in the US. Donald Trump's going to sign it. So this is more or less pricing by the markets, as we saw the last 2-day big equity rally. I agree with Blake. I think equities are probably going to struggle now going into next week as month end goes and fund rebalancing is done. I still think, and I've been saying this in chat room as well, I think there is one more leg lower. I think it's going to be probably the last leg lower in equities. How low can it go? I was always saying 1,800 to 2,000 in S&Ps. I still think we can get there.
But I agree 100%, Stelio.
After that, just the amount of stimulus in the economies of the world.
Stelio, have you seen my weekly chart here in the S&P?
Go on, let's have a look. Oh, yeah. Yeah, exactly. So that's what I think about equities. Now, oil is still under pressure, but I was reading that they're already starting to close production in the US. Wells are being set to idle at the fastest pace since decades, like 30, 40 years. And even though there's a surplus of oil at the moment, and you've seen companies filling up tankers just to keep it in storage, basically, that eventually is going to get balanced because production is going lower. So I have said for a while, and I still think so, that prices at $20, even $30 are no way sustainable for the medium term, because as everybody thinks at the moment, this virus, it's going to come, it's going to go, it's probably going to come back next season in the winter, but the effect is not going to be as catastrophic as it is now. So oil here, I really don't think how this can be at $20, $30 in a year's time or a year and a half.
Having said that, I still remain optimistic by looking at the chart, and Greg is going to give us his input as well, that we might actually see teens, Stelio. And I'm really looking forward to it because I'm going to be buying.
Could do.
Yeah. I mean, look, it still looks very, very heavy, right? I mean, no real bounce.
Absolutely. Absolutely.
So let's hope we get closer to 15. I mean, it's going to be generational type of opportunity.
The question is how do you get long? Because there's all these for the common person. There's all these ETFs which have negative carry, which have contango. So you have to find an instrument that doesn't kill you if oil doesn't move for a month or two.
Still, Stelio, I think the upside is going to be that huge that even if you have to take the hit for 1 or 2 months, it's going to, you're going to make it back multiple times, because I really believe that
I agree.
Price can, I mean, if we go to 15, I believe that price can triple within half a year, a year maximum.
Yeah, could be. Anyway, that's
Okay.
it. That's it from me. Let's bring
Gregor.
Gregor on.
Let's
Yes.
see what do you have for us, mate.
How are you?
Good. How have you been? Family
I'm
okay?
fine. I'm fine,
Did
yes.
Did it stop snowing?
Yes, it stopped snowing and now it's like 12 degrees or so. But yesterday it was like we are at the start of January.
Yeah, okay. It's you know how it is. Spring days sometimes can get a little bit crazy.
Yeah, sure. Okay.
You're on lockdown there too, Wizard? In your country?
Yes. Who is not?
Are
Ours is
Are there any countries in Europe that are still not locked down?
in Europe? I don't think so. No, no.
Well, do you have police or military on the street to enforce it, or it's just a?
No, actually, we can go out. It's not forbidden, but we just must not hang out more than 5 people at a time.
Okay. Yeah, because there's still people driving around in California. I could hear it early in the morning, even though it's far away. I could used to be able to hear freeway noise, and I can't in the morning. But there's still people, going to and fro here in California.
Really?
Yeah.
Yeah,
I mean, clear about it.
No one didn't expect actually that coronavirus would spread into warm countries.
That's why, unfortunately, Dale, you'll see that the US's curve has started looking
worse. We're going to get hit the
very
worst.
nasty. Yeah, look at this.
Yeah.
Instead of flattening out as most other curves, it started going vertical.
Yeah. Well, that's what happens when you start a trade war with China. Just my opinion, Mr. Conspiracy.
You know my opinion about conspiracy theories. I mean, it has no value in subscribing to them because some of them are definitely true, but most of them aren't. And in most cases, you can't verify which is and which isn't. So life goes on. I mean, it is.
Well, they won't let anyone in there, so how could it be verified one way or the other?
Yeah, very true.
I rest my case.
Okay, Gregor, grab the screen and give us your outlook. I want to know what you think about the dollar here, what you think about equities, what you think about commodities, mostly the metals and crude oil. And we take it from there. Dale, do we have an interview today?
No.
Oh, great. So so Gregor, you have plenty of time.
Yeah,
you have a few hours there, buddy.
So firstly, I want to look at dollar index to give just a longer term perspective. I think, as we discussed with Steve already a few days back, that we all assume that sooner or later US dollar will see a major reversal. It may take a lot of time actually to put a high in place, or it may, because of the events, which everything is happening so fast, it may actually be much earlier than some think. But from an Elliott wave perspective, I still think that this 2016 highs is yet to be taken out, and then I would be expecting a turn. So despite this recent weakness that we are seeing, I think it may either be even part of this maybe nasty wave B, which can become even more complex, or it is just a temporary retracement. As you can see here, let me just delete this, temporary retracement within this still already ongoing wave C. Actually, you have a free wave drop from the highs. So to resume higher for a wave C, an overlap with 101.10 would probably confirm this scenario. Now to give you, to go back on this longer term chart, what I did is just also bring here this, do you see, if I bring the screen, do you see it or no?
Go ahead and I'll tell you which. I'm still seeing the dollar monthly and the dollar 4 hour.
Yeah, okay, you don't see this because I selected only screen share instead of whole desktop.
You selected Windows share, you mean?
Yeah, because I have a wide screen and it would not be useful. Anyhow, I will post this into the chat room later for the ForexAnalytix clients. So you will see that actually commodity index is at the multi-year lows. So I'm expecting that those commodities will sooner or later will try to pick up in price, and that would probably go very nicely in hand with the dollar index potential top formation, maybe already this year. Okay, but as we said, 2016 high still yet to be broken. So if we go to the euro dollar, those lows are also still in place here from 2016. So I'm expecting this wedge to continue for another drop. Maybe we get a sharp decline towards parity. That would probably be the most interesting price levels. Also from fee perspective, there's a 78.6% compared to this bullish run that we had from 2000 to 2008. Looking at the 4-hour chart, same scenario. You have a free waves rally back into the 50 and 61.8%. So turning aggressively bearish on US dollar would definitely be too soon, in my opinion, at this stage. Today is also Friday. I think that if we can continue lower for the US session, then maybe we got more weakness next week. But what is my concern is about the media will now try to focus on a daily basis on the coronavirus numbers, the same thing like it did in the past few weeks for the other countries. And always when the numbers were constantly increasing, you have seen those currencies were actually be selling off. So maybe
to add to that, Greg, don't forget that since most data are backward looking and many of them come out once per month, we're also going to be getting a lot of backward looking data that are going to be horrific, like the employment data we got yesterday. So that's also going to play a role.
Yeah. So what I want to actually highlight here is that if you're trading dollar, I'm kind of a neutral right now. I still need this confirmation, but overall, if you're trading it, just be aware of those gaps, because I'm sure that there will be maybe some bad news coming from the US during this weekend. Looking at next pair, I want to check is cable. Okay, cable has seen a very strong drop, and now you are seeing a very nice reversal. But so far, this reversal is taking us back to this very nice 50% retracement for potential wave 4. And again, of course, this could, any free wave movement, when you have such a potential sharp wave C, can become 5-wave movement. But if you see a drop back below 1.12,
it means lower.
Yes, yeah. Then I think we are going lower. So now it's a decision is going to be made in, I believe, early next week to see where we go from here. But longer term, I think that you have to be aware that we are here in a 5th wave. We actually already passed those lows from 2016 on this pair. Okay, so it will be really interesting if we see another retest or no, but longer term speaking, I think that same thing with euro, same thing with the dollar index, that we are going to see sooner or later those significant reversals. Now, we have seen commodity currencies rallying quite nicely in the last few days. The reason is probably because crude oil turned sideways. We have seen also nice rally on stock market. So this put some had some positive impact on the Aussie. But still, looking at this recovery, I mean, we are at the 38.2%. Anyone who is familiar with the Elliott wave principle know that this is a very key level for a 4th
Same
wave.
thing with the S&P. The S&P tested the 38.2 of the drop. And to be honest, these rallies in Aussie and Kiwi, for example.
Yes, Kiwi has the very, even better.
From a basic technical perspective, they look like pennants, right? Like bearish pennants. That's how they look on the chart so far, at least.
Yes. So also here on Aussie, I have actually 3 different interpretations, not only one. The first interpretation can be that this was an ABC rise and you had an ending diagonal in wave C. In such case, you know that the drop is coming back towards new lows. The next interpretation is that you have a WXY because of overlapping recovery. Also valid formation. The same thing, it suggests drop to a new low. But the other interpretation would be that this is actually a leading diagonal.
Yeah,
Yes,
so
for
it's
a
the
wave
first
A.
wave of...
And you
yeah,
get wave B and then more upside. But what is
Yeah.
interesting for the next few sessions is that even this leading diagonal, if that's the case,
should lead to
suggests
lower
a
prices.
free wave drop.
Yeah.
Yeah, so I'm
So
thinking
bottom
that,
line, risk reward is great to be short here, even if that doesn't lead to new lows.
yes, but just don't leave anything running for a weekend. That's just my...
Yeah, of course, because we know that we've seen huge...
Maybe it's even
huge
better if
gaps,
someone
yeah.
want to trade in these volatile markets and you still see a very nice setup on Friday. You can open a trade, close it before the market closes, and just reopen if you don't see any significant gaps on Sunday or Monday morning.
Agreed.
Yeah. Okay, so that's for Aussie. Now let's take a look also on dollar CAD. Now, dollar CAD, I think it made a very beautiful three waves of a setback. Now, we have seen a setback for almost 50%, but it stopped at the starting point of this small wave 4 here, not at the end point, and which is very typical when you have an extended fifth wave, like in our case. So I think that this is a very interesting zone, especially if we consider that we are at 1.4, which is also around psychological figure. And what I also like about dollar CAD is that we still haven't seen our decisive break above these 2015 highs. Okay, 16 highs. So I still think that we will clear those levels out before potential major reversals. Also, the head and shoulder formation suggests that we are going to see a target for 1.5. Okay, if you will connect your head and neckline and then project, you will come out with a 1.5 target. So having said that, I think that dollar CAD is maybe can be very interesting. I said that crude oil is also slowing down, and if you will take a look on crude oil, is actually slowing down for a fourth wave. Here we are just consolidating. There is no way to count this as a bullish reversal because we are just sideways.
It's very heavy. I mean, it's clearly, you know,
yeah,
bearish
so
consolidation.
But what is interesting is that if that's a triangle, we are going to see final trust maybe towards $18 per barrel, maybe $19, and then we could see a
crossing
very
my
nice
fingers,
crack.
hoping for tins.
Yeah. So also, what about the S&P 500? Well, I think that S&P 500 can actually see higher prices after a setback, because if you will look at the substructure, there was a 5-wave rise. I will show you the wave count in a second, but before we go to the S&P, I want to look at this correlation chart. It's not an updated, it's just from one old analysis, but you can see that both were moving quite nicely together to the downside recently, okay? But here, back at the start of the year, the crude oil was the first one who actually turned to the downside.
Turn lower, yeah.
Then S&P catched. Now what we see is that the S&P 500 is rising is actually looking much better than the crude oil. So if the S&P 500, which I assume is going to make minimum 3-wave recovery, then we can assume that crude oil is going also to make a reversal higher, but from a new low. So timing when this wave B will unfold on the S&P 500 could cause a 5th wave here on a crude oil. And this is actually matching perfectly, especially if we consider that we see a triangle here, meaning that triangle suggests that we are going to see a final push down in the current cycle before our market reverses higher. So I think that the crude oil could really see some very nice supports in the upcoming week.
Could 5 be an ending
17.
diagonal, Grega?
Excuse me?
In crude, could it be an ending diagonal? Looks like, you know, 3 drives.
On a week, you mean on a higher degree time frames?
On the one that you're showing on the right, where wave 5 was new lows.
Maybe yes.
No,
it
would have to go under. It'd have to be like $12 if for that line to meet. But yeah.
It could unfold like a diagonal, yes. Maybe not the perfect textbook example, but even it would be the same implications. You know, you would expect a bounce or a slowdown at least of this bearish price move. So I mean,
Grega, I'm sure since you touched a little bit stocks by showing the nice correlation and who is leading who in crude versus S&P. Some people are not very familiar with Elliott waves. So just to clarify, you're looking for the rebound to unfold further higher, but you're looking for this S&P rebound to prove corrective in nature. So you're looking
actually,
for lower levels.
Actually, on the S&P 500, what I'm expecting is a minimum free wave bounce. I'm
Okay,
not saying
can
that
you show us longer term counts and give us your outlook on the S&P
Sure.
specifically, because we
Yes.
know it's the benchmark for risk assets.
Yes. Okay, so actually the flat interpretation, okay, is still valid for this S&P 500. When you had a free wave rise with with very nice sharp wave C here to new high, and then you have a very strong drop for a wave C of wave 4. Why I'm looking for this interpretation still to be valid is because in the flats, wave C will move just for a temporary time to a new low, meaning will cross wave A levels before market will turn. It has been the same thing. Let me see if I can go back that much. It was the same thing here in 2000. Firstly, here in 2008, when we have seen just a small push to a new high for a wave B, and then this
new lows
took us to a new low beneath wave A before market recovered. So I'm not saying that we are going straight to the upside, but what I'm saying is that at least 3 waves to the upside will unfold. Maybe I'm wrong and market has already topped here and we will see wave B rally and then a very strong drop. Actually, I think I have this wave count as well. Yes, it's here on the right. But in both cases, I think that we will see more upside within this bounce. Either this will be a free wave movement, or maybe just it's just a start of a new wave 5 breaking to new highs.
So bottom line, you don't exclude the possibility of not seeing a lower low.
No, of course not.
Okay.
Okay, so but why I'm suggesting that maybe we will see more upside either for a wave B within wave 4 or maybe for a wave 5 is because the S&P 500 on the 1 hour chart, I can count 5 waves up. Okay, and this looks like a very nice structure that will potentially take us higher next week.
So there's a leg missing, at least a leg missing,
Yes, so either we see wave C, maybe even wave 3. I don't know, and
okay.
I don't want to predict too far.
Under this scenario, that this is a corrective rebound from here for a wave 4 on the way down, what would your next new low downside target would be in that case? Of course, you need to see the correction first unfold before you can have more measured targets, but
I would probably looking for 1800.
Okay, okay, that's where I'm looking for as well. Like between 1800 and 2000 is where I'm looking for this to bottom out. So I just don't consider that likely, having already seen the low. It's not impossible, of course, because you have to adjust for my expectations for inflation. So I don't really care what the S&P is going to do in nominal prices, because what will matter most is what happens in real prices. So that's a different story. And Elliott wave counts don't take inflation into account. They couldn't care less, and that's fine because it's a technical form of analysis. I mean, these are other issues to be considered. Okay.
Yeah, sure, of course. Also, what I wanted to add to this crude oil and the S&P 500. So you're going to see possibly more upside after this wave B on the S&P 500. At the same time, when this wave B will unfold, I said that crude oil, because it's trading much lower compared to the S&P, could see a push to a new low out of a triangle. At the same time, I would be watching dollar Mexican peso. When these markets, when the crude oil will potentially stabilize at the new lows, when you see this wave B on the S&P 500, I think to have an alternate view regarding whole dollar story would be looking at the dollar Mexican peso. I mean, this one has made a very nice reversal to the downside. It probably
after an explosive rally. I mean,
Yes.
Unbelievable. Yeah.
But I haven't compared the current decline, the current strength of Mexican peso to Aussie CAD or any other commodity currencies. But I will look that later today, because I'm thinking that this one appears to be very nice reversal. Actually, it could still be in 3 waves, but if we consider that the crude oil could maybe really bottom down there, if the S&P 500 could really see more upside, then I think that the dollar Mexican peso can be very nice here for this wave B and potential drop or trade.
I like it. For
into
full
wave C.
disclosure, if you want to have a look at it, I'm already short Euro MEX, so Euro MXN. If you pull it up, you'll notice that it has quite a similar structure.
Okay.
And I shorted it actually yesterday when it broke through. Yeah, there it is.
No, it's not.
No, sorry, this is USD MXN again. Yeah. So if you go to Euro MXN, you'll see that it has quite a similar structure. Made an explosive move higher and a very, very nice reversal lower.
Yes, it's actually a very similar pattern. Yes.
Yeah.
Maybe you had even ending diagonal here, which
3, 4, 5, yeah.
Which makes this bearish case even more
Appealing,
interesting.
yeah.
I mean, it's a perfect ending diagonal, and there
Yeah.
you had those 5 waves up.
So yeah, I'm already short some Euro MXN. First rebound, I'm going to short more, actually. I like it.
Yeah, so the story, I mean, it's for the next 3 trading days, I would say. More upside for just to sum it really quickly, more upside after wave B on the S&P 500 means more risk on. If more risk on, it means that dollar Mexican peso could potentially see more upside in connection with the crude oil, which I think could stabilize at a new low because we are going to see a 5th wave.
We haven't talked about the elephant in the room, gold.
Yeah. I mean, probably what banks are now doing to some of their customers, they want to buy their physical gold, is probably making a confusion, I would say, on the gold market. I mean, if the ETFs are not backed by gold because there's not enough gold available, then I also assume that traders are losing some kind of a trust into gold itself, I would assume. So maybe when we are talking about paper money, so maybe this could also result to some price reversals actually to the downside on gold.
Yeah, Grega has my 1330 level up there. That gives me conviction. For C,
so
right?
what is your main count? It's that one we see on the left, Grega.
Yeah, you better hedge your physical quick, Steve.
Oh, no reason, coach. I'm not shorting gold no matter what. I'm not saying it can't go lower, but as I've said multiple times, you might wake up one day and be 20% higher. So, you know, I only want to be in one direction in gold, and that is long through physical. So, you know.
Yeah, you know what, as you know, I'm looking from sentiment perspective. I mean, I saw last time, I don't know if we shared those on Skype with some of you, or did I see it on Twitter? Someone posted a picture from Germany where there's a line, people standing to buy the physical gold.
Yeah.
Mm-hmm.
Okay, so
and
it means there is a very huge demand.
Yeah.
It means
that
if there is a very huge demand, it means that there's extremely positive and too optimistic, almost like euphoria. And if that's the case, then you know what the next cycle is. And in 2011, there were banks who were, I think I also shared this article from 2011, where there were banks demanding and buying gold very heavily back then in 2011. And maybe there is now very similar sentiment. So, and look what happened after 2011. I mean, of course, you have to consider fundamentals, and sure, price in such case should rise much more. But because of the sentiment extremes, I would really not be surprised to clear the market a little bit, to price to chop around, maybe come a little bit lower before we eventually see a break to a new high.
That is definitely not unlikely. I'm just in general warning people, Gregor, that under current circumstances, an accident, in quotes, an event that can actually propel gold's price extremely higher is not that far away. I mean, we know that there is no, I mean, the futures market supposedly work by either settling in price or asking for delivery. Now, imagine under current circumstances that we know that physical has almost disappeared, gold, silver, etc. Imagine if a big position in the future market asks for delivery. Now, there's going to be some big institution that is going to get a notice that you are supposed to deliver that at that address at that date. And they're going to be striving to find the physical commodity to buy it so they can actually deliver it, which, of course, when they sorted it, they didn't have it. And the market is going to go berserk. So I'm not saying that the count you're showing can't pan out. It can. But I'm saying that it's a very dangerous period of time for somebody to be
Find something else to short.
Short gold. And I would definitely, as you said about other things, I would definitely never go short gold under current circumstances during a weekend.
In my opinion, the best solution or the best answer to this
options.
If someone is long gold, let's say for the last 2-3 years, maybe you would probably book some profits here, at least part of it. If you are not in a gold and you're still looking to buy gold, and because of the fundamentals, but price is high, why rather not than looking at silver?
I'm 100% with you. Gold, yes. I mean, silver is, I was talking about
based
that
on price perspective, technical perspective,
silver
and fundamental
is
perspective
cheap.
Is silver probably the best.
Do you have a gold silver ratio chart, Greg? Because we traded, I think, 125 or.
No, I think 130.
Yeah.
Yeah.
Well, just
historical highs. Yeah.
Come off. Here it is. Yeah. 2 drives there.
Keep in mind, Gregor, that those are historical highs. Gold silver ratio has never.
Okay, so it makes sense actually. Silver can outperform if really this whole metal bull market will really continue. And imagine if gold can pass 2000, and what will happen then with silver?
It will explode.
It quickly can catch it up.
I'm with you.
Yes.
After $8, Greg.
Okay, let's cover some of the questions that we have from people. First question, not in order, but it's a class that we didn't cover at all. What do you think about cryptocurrencies here? So let's just take Bitcoin, which is like the blue chip of.
Yeah, I have this. Let me check if this broker has a Bitcoin, because I cannot share this screen. The other
You can just change the screen you're sharing if you want, Gregor.
Are you sure?
If you click this, if you click the share button again, you can just select another screen. So that's not a problem.
Okay, let me try new share.
Mm-hmm.
Oh, okay.
There you go. We can now see trading view.
Yeah. Okay. Perfect. So about Bitcoin. Well, I think that the best bet is maybe now a consolidation. I mean, it looks like that investors who were long stocks and those maybe also had some money in Bitcoin. If they went out of stocks, they obviously went out of Bitcoin because Bitcoin itself is already very speculative. So you don't want to be invested in something like very speculative during times where there is a lot of fear across different markets.
Obviously.
Yes.
A lot of people were claiming that Bitcoin and cryptocurrencies are,
Yes, that cryptocurrencies will continue straight to the upside.
Yeah, which was, I was explaining that it makes no sense because they are, in essence, digital risk. I mean, is there any chance that stock markets would be in a bloodbath and people would be like, yeah, Bitcoin seems like a good place to be, and under such a scenario? Obviously not.
It's recovered more than the S&Ps. And Grega, you made a great call on Skype to us when we were down there around 3,600 and said it was a very good long-term buying zone. And that's, where you have C.
Yeah, so now how I see it is that, this stock market, before really some investors' trust will come back when coronavirus could maybe really be slowing down, especially in the media, to not put it so much onto the highlights. I think that till then, Bitcoin will also maybe continue to consolidate. So I think that ABCDE triangle here can be the best bet. I mean, if we are going to see a wave B bounce there on the S&P 500, then even Bitcoin will be in trouble. So in such case, I would be looking for this interpretation for a drop towards $1,000, $2,000 per one Bitcoin. So in both cases, I see consolidations that are incomplete. So it's very hard to be long here. I mean, if there is really a triangle going on, you will still have your chance after this wave E.
To buy cheaper, you mean, yeah.
Yeah, so I think that the Bitcoin should be just on the watch list and see how those patterns unfold. But overall, I think that that Bitcoin can stay here, but because of volatility, it may even stay here and still be interesting to buy once and if we hit maybe 1,000 really in maybe.
Grega, a very important asset class that we left out, my mistake, is what do you think is happening here with treasuries and bonds? Where do you think we are in the count? Do you think that we've seen the low in yields after the spikes we had, or you think that might have been some kind of a wave 3 and we're headed higher in bonds, lower in yields?
Just a second. Okay, so
yeah, this is the 10-year treasury. Yes.
Yes. Oh. So I'm thinking that we are here in a wave C, and that this wave C has one leg up higher coming before a potential top. And the reason why I'm looking for another push up here is because a drop here on the intraday chart, as you can see, it's in 3 waves. Mm-hmm. So I'm thinking about more upside, but as you know, correlation has been lost with the stock market. So it's hard to make any conclusion from this in the next, let's say, for the next week or so. But looking on the longer term perspective, you really should be aware that we are here in the 5th wave down on yields, and that sooner or later yields will have to pick up. They may continue to be very slow, but the next cycle, we know that cannot be anywhere else but to the upside.
So you think we'll take out 40 in the 10-year yield?
Yeah.
Yeah.
Can you show us a longer term count of where you think in the longer term cycle bonds are?
Yeah, I mean, here we had seen move to the upside after this ABC, and we are running into this fib resistance where we potentially could actually limit the upside. Now let me take a look also on bonds. Okay, so on bonds also, we can count 5 waves to the upside, even already 5 waves within wave 5. Okay.
So you think that bonds might have already topped, but treasuries might have one more leg higher?
It was a very strong drop, so maybe we get a little bit higher here for a pullback and then a move to the downside. But generally speaking, I think that both will maybe make a will hit resistance and show us stop formation by the end.
That interpretation would point to an overperformance of euro against the dollar in the time ahead.
Because, yeah, of course, because of the yields for the
Yes.
euro would be
Yes.
rising much faster, much better. Yes.
Yeah. Okay. Okay. Nice. So, okay, let me go through some of the questions. Hi, Grega. What about yen pairs? Oh, yeah, that's a good question. Actually, I've said many times here, Grega, if you haven't heard it, I'm staying far away from the USD yen for quite some time, and I feel so relieved that I've done so because it's a huge mess. So I'm not touching it personally, but if you if you feel you know, gutsy enough, go ahead and tell me what you think about it.
Okay. So dollar yen, I mean, it's clearly trapped in consolidation. I was looking for, as you know, for a triangle, either to be placed in a wave B, which is still my primary scenario, but still ongoing triangle, or we are going to see a drop for a wave C. But this one on the right has been invalidated because after this recent break below wave B and wave D swings, we haven't seen continuation lower. So I will stay focused on this primary count, and it looks like that we could be now in a wave D. Looking from this on a daily perspective, which is here, I think that this was the first leg of recovery and that we'll see more upside after a pullback here.
And
Okay,
then lower from what I saw. Then you expect wave E to unfold, right?
And then wave E, yes. But let's say for the next few weeks, I think that there can be more upside. Now, the first count that I'm tracking is that we have seen here a wave A with a leading diagonal, and now you have a flat for a wave B. Or even better interpretation is that wave A has finished here and that you are now going to see a free wave drop for a wave B down towards 50 or 61.8% and then a rise. So looking at this whole reversal, like how it's acting and playing out, I really think that more upside could be coming and wave D ideally towards 114.
How low would you be looking for wave V to perhaps unfold to?
Towards this swing low here from wave 2 at 105, 106, that would be ideal support if we get this free wave drop.
No, I'm not talking about this pullback. I'm talking about wave E.
Okay, just a second. Well, wave E, it's definitely too far to predict. I mean, it can go all the way to this lower trend line support and then a bounce. And maybe this wave E can, if we can draw the same line with the S&P 500, maybe if you get a drop for a wave C on the S&P 500, that could cause a wave E on dollar yen.
Okay, let me go through some of the questions. We already covered plenty of them before even reading them, so I'm going to just read whatever we haven't covered. BOC cuts rates again to 0.25, 50 base point cut, no surprise there. USD CAD, Greg already covered USD CAD, so you can go through it on the recording. There's a question about pound kiwi, and if you want, Grega, we can make it a little bit more generalized. What do you think about these crosses? Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi.
I think
they had some explosive moves higher. Do you think they're over?
Yeah, I mean, those reversals are definitely very interesting at on some of the pairs, and I would not be surprised maybe to see commodity currencies doing much better compared to those. So, I mean, we should look at the stock market at the same time to figure out if that would be the case. As you know, risk on is normally the case, and when that's when
true.
the Euro Aussie is moving to the downside. So maybe in the near future, if stocks will continue to rally for this free wave recovery minimum, that's mean that maybe Euro Aussie will potentially see more downside. Now, if I make a wave count on this one, let's say that we are going to see ABC. There you had a free wave drop for a new low right there, which means that wave B should be in a complex correction. So maybe the flat is the best idea here. Okay, and you would expect maybe, oops, a 5-wave rise now for a wave C of B.
Okay,
Or
and then
if
lower
it
again.
continues to stay sideways, we could actually be even in a triangle and still expect weakness. So I'm thinking that commodity currencies could outperform those euro and similar.
One more pair that we know it's extremely liquid, it's the fourth most liquid currency pair, that has definitely taken people to the woodshed with new highs and then new lows and then new highs, is Euro Pound, which has reversed lower again, by the way. What do you think about Euro Pound, Gregor?
I think that the Euro Pound, looking at the weekly chart, I still think that these 2016 highs are ready to be taken out. And ideally, we are now in a fourth wave pullback here. It looks like a very nice retracement. I know it because from psychological point of view, whenever you see an uptrend and then you see such a strong moves against this trend, you are maybe just already trying to change your views immediately. But looking at the whole wave structure, I mean, it looks like a perfect fourth wave here that could send prices into a wave 5 higher. Looking at the intraday chart, I mean, it's a very nice free wave setback for now with a triangle in the middle. So maybe the support is going to be seen in maybe early next week, but I think that this uptrend is not over yet, generally speaking.
Okay. Anything else that you follow closely and you're interested on that we might not have covered yet?
No, not really. Actually, I have my eye on and very. Sorry, I really love the structure on dollar cat at the moment. If dollar trend changes in general, if we see some very strong gap on Monday, then I would pay attention to dollar Mexican peso to maybe to continue even lower. But before that, maybe watch out for this crude oil to spike to a new low and then a reversal.
Okay, perfect. I'm with you there. I agree in most things you said. I'm a little bit more skeptical about S&P. I mean, my main case scenario is that S&P is going to see lower levels first before it can recover higher. But anyhow, that's one of the two counts that you have in mind. So, Gregor, more or less, we're looking at the market, in a similar way. For those that don't know, Gregor is posting his analysis every single day on ForexAnalytix for every one of the 30 markets that we cover. Thank you very
stuff,
much, mate.
Gregor.
Yeah, great stuff.
Thanks,
as always.
Dale. Thanks.
So, Coach, you want to wrap it up?
No, I want Gregor to say our tagline. Do you know it, Gregor?
Excuse
Don't
me?
just count your
Pips?
Peeps
Blessings?
and blessings.
Yeah.
Yeah.
So, I hope everyone, our whole team and everyone that comes here, that everyone remains untouched by this virus. Spend the weekend preparing for next week. I think this was a great session to give you some ideas, and don't just blindly take anything. Make sure it lines up with what you're thinking and use it for confluence and confirmation. So everyone be safe, and we'll see you on Monday. Have the best weekend possible that you can have, and maybe play Monopoly with your family. Be a break. I don't think you could get stopped out playing Monopoly, can you? Unless you land on Park Place with a few hotels on it.
Are you kidding me? We've started playing Monopoly in real life. Now central banks are creating money the same way it's created in Monopoly. So.
Oh my God! I just passed go and collected $20. What a great way to end the session. Anyway, guys, thank you very much, and have a great weekend, Gregor, Steve, and Face Warriors. Have a great weekend.
Bye, guys.
Adios.
Bye-bye.
Shut it down, bro.